Hey guys, thank you very much for making it in the morning. I know it's difficult with all these parties and all that. So today the topic is very open. We're going to be talking about stablecoins in general, like how they matter in the industry, how maybe they could even help shaping the industry in some way. How they can be an indicator of a bull or a bear market, how their usage can be tracked and what it can do. And well, we're pretty lucky because we have the centralized and the decentralized world in the same panel, and I think we have pretty good people. We had a chance to exchange right before, and I'm pretty excited of what was going to come in today. So, Yan?
Hey guys, this is Ian Lin. I'm product director at Circle. You may have heard about Circle. You most likely have heard about USDC. And besides issuer as of USDC, we also, Circle also provides a developer platform that enables developer to build leveraging USDC. So we're about delivering the mission of enabling frictionless value transfer over the world with our stablecoin.
Hi, Dave Shin. Oops, sorry. I'm with Layer Zero. I lead Asia BD. We are an omni-chain network using a messaging standard called OFT to pass messages so that people can move assets from chain to chain. We have about 102 L1, L2s, and L3s connected to our network. And I'm based in Singapore.
Hello, my name is Eneko, co-founder of Stabolut. At Stabolut, we created USB, a decentralized, crypto asset-backed, yield-bearing stablecoin that doesn't depend on banks. So happy to be here.
All right, thanks for making it. And I'm Claude. We've been building stablecoins for a minute, and everything we do in DeFi revolves around stablecoin. Like we had the first Euro decentralized stablecoin, but here I'm going to act as a moderator more than anything. So without further ado, let's start by, I get by saying that stablecoins are not the most exciting thing that people are looking into when you're in bull run. Like a bull run generally means that people are moving from stable assets, yet well, you can look at the stablecoin growth as a very strong indicator of of the market cycle. So what do you guys think about this, and how do you guys think stablecoins matter in different cycles? It's an open conversation. Like anybody can take the mic. We don't have to stay in order.
Cool. All right, I'll pick this one up first. So I think that as Claude mentioned, right, stablecoin compared with all these other tokens, meme coins in a bull cycle, feels kind of boring. The thing about stablecoin is that it solves real world problem. It's not just for speculative value. If you look at kind of cross-border money payment, there's about $40 trillion that's moved on traditional finance rail per year. And this is one of those areas where stablecoin on blockchains can really significantly reduce the cost, improve the speed, and provide a much better solution than TradFi. Now, you may not see it. You may be using services and feel like, oh, okay, I can send money from Taiwan to the States and back. If you use a traditional banking rails, you'll be paying wire transfer fees on both sides of the bank, and there's a lot of intermediary fees that are incurred. But if you use USDC, send it over, say for example, layer 2 EVM, it'll be just fraction of pennies, and you can settle instantly. So that's where I think the kind of the impact is. Whereas stable coins that, despite it's not being as interesting, you don't chase it like a meme coin that could go up 100 times or can go to zero, but it can solve real world problems.
Actually, sorry to stop you here, but I think even when it comes to speculation, stablecoins are very useful because all these new coins that are trading could trade against volatile assets, but very often they end up trading against stables. And stables are always what you want to trade against, for a lot of reasons. One being that you want to exit a position, you don't want to have to think about it tomorrow. It might be that you want to exit an interior cycle or something. You're saying the token is going up. You want to sell, but you don't always want to sell for BTC or for Sol. You might want to sell for stable, which is what a lot of people do. A lot of exchanges end up listing USDC pairs, USDT pairs, and all that. So I think that in addition to the real world use cases, that's why we see a big growth of stablecoin in bull runs, because you have this. But I agree, the stable coins are great for real world use cases. And I think like if we talk about real world use cases, you might as well also talk about the non-dollar stablecoin, like which is what Dave was like pretty interested in. Like earlier, he was talking to us about potential for Naira, which could be which could be interesting. If you want to tell us more about why you believe it could be important and where you believe it could go.
Yeah, I think the regulation coming in and policies that are coming in around the world for stablecoins is going to attract a lot of institutional interest. With that, I think what will happen is there's a real interest around markets in the East to see if there's ways to settle cross-border off SWIFT. And stablecoins regulated, backed by policy, will solve that issue. And the thing that's driving that from a macro sort of perspective is the West has clearly weaponized the dollar. And so we are, even in sort of the startup space, we're seeing people who prefer to try and use assets away from US infrastructure. And so my strong belief is, again, with non-US dollar regulated licensed stablecoins coming into the market now, the use cases will open up quite a bit, including things like being able to trade cross-currency stablecoin pairs, where you can do like USDT versus Hong Kong dollar or something like this.
So, I mean, in the specific case of something like USDT against Hong Kong dollar, I guess the question I had about liquidity would be an easy one because the Hong Kong dollar is pegged. So it will be a pretty affordable way to get liquidity. However, how would you think that people will solve the liquidity issue inherent to non-dollar stablecoins?
I actually think there's going to be a trigger in the market where non-regulated US dollar stablecoins, the big one in the room is Tether. I think there will be, when policy starts to really come out in the US with Trump, there will be pressure on exchanges, in my belief, to delist non-regulated US dollar stablecoins. So this is where I think the USDCs of the world will take in some of that liquidity off Tether, for example. But it will also move towards
so Ian is very happy to hear that, yes.
non-US dollar stablecoins as well.
It's interesting, but let's say you have the non-regulated US dollar stablecoin that are dropping. If I was holding liquidity in USDT and then my option becomes USDC, would make sense. But let's say now we're looking at non-dollar stablecoin. The people losing access to USDT might not necessarily migrate to those non-dollar stablecoin. So where would their liquidity come from?
They're not going to go to USDC. Sorry about that. They might. I said they might. They might. But my belief is they won't, because if you look at the profile of the big users of USDT, they're likely going to move to something else.
Would you think this is the moment where DAI will shine?
I don't know. I mean, if I looked into my crystal ball, I think that liquidity will distribute if that event happens. And it's already happening in Europe, by the way. I mean, you're probably seeing it. Because of MICA, they're delisting USDT in a lot of exchanges. So, but that liquidity has to distribute somewhere, right? And it's not going to go into Bitcoin. It's not going to, a lot of it won't go into regulated US dollar.
Yeah, for sure. Fair enough. It's I was really talking from a currency perspective. Like, let's say I'm doing tomorrow a Naira stablecoin. Where will I get liquidity for my Nairas, right? Like, I mean, if we want this cross-border thing and people are starting to create like a stablecoin in different currencies, it's not the liquidity from USDT that will enable Naira to grow, right? So where do you think it would have? I mean, I'm
one last point, and then I'll pass it off. But I think the liquidity, because these are regulated and licensed, will come from perhaps two channels. One being market makers,
right?
Which is why it's important for us to try and form a cross-currency marketplace for these things. The second thing is these will be backed by a lot of banks.
Could be. Yeah. That would make sense. Regulated stablecoin would have like the approval for banks and all that. Yeah.
So there will be some sort of reserve that will be backing the liquidity in these tokens. But I think the activity on chain will come from things like, more cross-border settlement or cross-currency trade pairs, these types of things.
Great, thanks. Sorry, Jan was really eager to make a point.
I was really eager to make a point, but I realized Eneko haven't had a chance. So maybe I'll follow after you share your thoughts on this.
First of all, going back to something that you said, Claude. So the growth of the stablecoin market. So now we are in a bull run. Like everything is growing in value, but I think that it's independent of the bull run. So we have now 200 billion in market cap because there is a use case that is behind. On top of all of this of the trading or all the trading pairs. So it's the real use cases of people using stablecoins for cross-border transactions. So this is going to grow like bigger and bigger, and that's the big. I mean, we are talking also the biggest these use cases of like cross-border transactions or how stablecoins are gonna impact in like emerging markets. So this is something really interesting that's gonna happen in the next few years.
Yeah, I agree with that. I do want to address a point, Dave, you made earlier about the non-dollar stable coins. And if, say, for example, regulation comes and forcing unregulated dollar-backed stable coin to be like off-listed, where would these funds flow? So in my mind, it really depends on the use case. I do see a world where there's a lot of on-chain FX. It's because it's just much more efficient than, say, for example, you have to off-ramp at every single country from dollar-backed stable coin. But if you look at TradFi, the thing about US dollar and why it's so strong is that it basically provides the liquidity backbone for any trading pair. If you need to trade from Hong Kong dollar to Singapore dollars, you have to go through US dollars. You don't trade directly through those two pairs, right? And this is why dollar-backed stablecoin will always have a role, even when the demand for non-dollar stablecoin arises. They would need to be like kind of providing the liquidity backbone to basically pair with any of these like trading pairs. And this is where Circle thinks about our position is that we think that dollar-backed stablecoin, like A is that like in terms of FX, it will have a position. We want to partner with anybody who issues like non-dollar-backed stablecoin. We have our EURC that operates in Europe, like being MiCA compliant. And I think that there would be enough room for a lot of players in this space, right? And in addition, another thing is that like many of these countries, they are basically facing inflation problems and they need to hold dollar to preserve the value. Holding Bitcoin, sure, in bull market is great, but it's volatile and people find it really hard to spend like non-stable currencies. There are reasons why people want to hold dollar because dollar is a stable currency and dollar-backed stable coin is a good way because it's really hard for them to get access to dollar in their existing banking systems. Under that setting, like until the dollar kind of value diminishes, I think there's always going to be a demand there. So I think that in the world where eventually regulation comes down and like, let's say certain players in this space may be forced out, I don't think that all of them are going to really flow to these non-dollar-backed stablecoin. But I do believe a world where there'll be more and more non-dollar-backed stablecoin providing that easier access of on-chain FX, but dollar-backed stablecoin will still have a very important role to play.
Yeah, and so it's interesting that that Bitcoin was invented to allow people to escape from their local currencies with encounters with hyperinflation, and then this role was taken over by stablecoins because people like still believe in the US dollar, right? But I agree that so still the US dollar-based stablecoins are going to be like huge, and like more and more we will see like other currency backed. I mean, pegged to other currencies. We will see other stablecoins that are getting at least their market share, but people still believe in US dollars, and that's why it's not surprising that the biggest penetration of use of crypto assets is in countries where people cannot rely on the local currencies, and that's the biggest use case. Yes.
Yeah, so it's actually pretty ironic that the whole industry was started on something to, like, you know, to help us hedge the issues around the world, and we end up like going back to the dollar. Like goes back to what you were talking about in weaponizing the dollar, I guess. It's but more interestingly, like those. I mean, we see here there's multiple ways of backing stablecoin among this panel. I'd like to talk about the business models of stablecoin. So first, like, how are you guys making money, and how do you think stablecoins are going to keep making money in the future? Like, and do you guys foresee growth, or I would say a difference in future market share into the ways that the backing of stablecoin changes? I mean, just for a reminder, last cycle, the most popular stablecoin ended up being USD, which was backed by magic, but, but eventually, well, somebody woke up. But today we're seeing like different things, like more like derivatives backing a stablecoin that could end up paying people. Where do you see growth happening in the space, and what's your first personal view? Then maybe your corporate views, if you intend, if you have a separate one. So what do you guys think?
So look, so if we embrace crypto to break free from the traditional financial system, so a stablecoin that is backed by fiat stored in banks, so it goes against like the very principles of this freedom, and that's why we thought that the world needed a stablecoin that was backed by crypto assets instead of by money in banks, a stablecoin that was independent of banks. So that's why we are in this space and building a stablecoin that is like different to this other model. So, and of course, so we will see. This market is huge, and this is not like a winner-takes-all market. So we will see different stablecoins backed by different assets, and stablecoins that give yield to the user, stablecoins that don't give yield, and we will see all kinds of colors in the stablecoin industry.
I think it's going to be, issuers are going to act more like e-treasury function, and they'll trade spreads on, again, like US dollar versus Sing dollar or yen on stables. They can take spreads there, make some money there. They can do, I strongly believe a market for stablecoin financing is coming, where you essentially take down USDC financing against RWA collateral that has, a good credit issuer, good yield. Also, there's other ways to I think, make money, as these guys do already with U.S. treasuries and other ways to do that. But I think that the real opportunity is around the cross-currency stuff. I think there's real money to be made there. If you look at the banks, and I worked at many banks for almost 20 years, the biggest trading desk is always the FX desk and treasury. And so there's a lot of these areas where you can make money off the spreads by trading those pairs.
Yeah, these are really great ideas. And these are things that, like, me being at Circle, I love to think more about. So just a little bit background about, like, Circle's business model is that our stable coins, we make money based off of, like, buying short-term T-bills, right? It's boring. We're not making, like, it's not like we're doing active trading or anything, but it is ensure that these short-term T-bills, whenever people need to redeem USDC, we can easily get out of the position and then give them their dollar back. So in a way, you can think about it's a lowest risk business model to say, hey, if you're giving US dollars, I'll put in short-term T-bills, make some interest off of it. And when the interests are good, this is great business. But obviously, as we continue to grow this industry, I think there's a lot of opportunities that we need to look into. I do agree that FX is a massive market. And I think, as I mentioned earlier, as we get into a world where there's more than just dollar-backed stablecoin, there would be potentially a lot of on-chain FX. It can replace, it would be more efficient than the current way of doing things. The current FX system, a lot of people are taking fee in the middle, and it's slow. And I think that looking at these different business models is something that can inspire us to think about new ways to make money. But one thing I know for sure is that magic money back in stable coins, that is not the right way to go. So we learned that lesson in the last cycle. I hope to see no more of this.
I'm very sorry to disappoint you, but I guarantee we will see more magic coming. We're in an industry that unfortunately sometimes rewards short-term gains more than anything. And those 1,000% APY are coming back, unfortunately. Now, I hope people in the room have learned. I hope you have learned. But I guarantee you, the space as a whole cannot possibly learn anything. And I mean, that's kind of our role here, people who have been in the industry for longer, to be always standing and making sure that the sound of what's right still exists. Because one issue we had last cycle was that even like people who understand crypto were saying that UST is great. Like I was in a panel and in a radio podcast and all that, and people around me were saying, no, UST is the most stable coin that you could do. It's mathematically sound and all that. And I was like, damn, like why am I doing here? And so I think every time you think that you learn, there is somebody proving you wrong that no, actually they didn't learn. So it's some of the industry will learn and we're good. Yet, I think there is room for innovative reserve models for stablecoins. And you were talking about Efina earlier and all that. I think it could be interesting to, again, discuss like in which type of application do you see which coins growing more? Like, do you see, for example, stable coins that you're talking about, like the model backed by derivatives growing more in a certain way, more than Circle, whereas like Circle would be more used for a certain use case? Which use cases fit which business models, according to you guys?
I actually think it's going to come down to very simple formula. We're going to see issuers, they're going to collateralize the new issued stablecoin against RWA. You can extrapolate more yield depending on how much risk you're willing to take onto your books by bringing in RWA collateral that might be lower quality than those that are higher quality, like US Treasury. But I also think the market's going to get smart enough because we're going to see a lot of institutional people coming in where we're going to see credit risk being priced into these assets that are being issued. So I would rather take in collateral and make money off RWA that's being issued by, let's say, Wellington Fund in New York versus that's paying me, let's say, 9 to 10% yield than, let's say, taking US Treasury, which only gives me a smaller percentage point. So that credit risk is really important. I think people are going to get smarter about that. And that's where we start getting rid of the magic issuers with no entities.
So it's a full disclosure. You're pretty much pitching our project, which is exactly what we're doing. We issue stablecoin backed by RWA of different qualities and one stablecoin per type of RWA. So that's exactly what we're doing. We believe in that. But because we understand that TBL is going to be the backbone and everything. But there's something, again, pretty ironic about this. Like, we built a system to be like protecting ourselves from banks, and the biggest assets in the space, like the stable assets, would not work without banks. Like USDC, like BlackRock holds all your T-bills, as you were telling me, and then BNY Mellon for the fiat. It's essentially we're extremely dependent on bank as a whole, right? I guess that's why DAI was invented, like to reduce this. Would you have a comment on this? And do you think we're gonna evolve? Like, is there any plan for USDC to also explore the the decentralized world, or is there a commitment from the industry to really split into this is going to be where the bank-backed stablecoins are, and there's going to be Circle, and then the rest is going to be like you guys or like Maker, Maker is another conversation because they have a lot of USDC inside. But what do you guys think?
Yeah, I can speak to. I think. In this world, there's definitely like a lot of different ways you can collateralize the stable coins, and Circle would always be like on the side that we are like staying compliant with regulation. We work with banks because banks help get us kind of the basically liquidity to fiat and back. And one thing that like probably on the prior topic is that I think the reason why people think about different ways to collateralize, apart from being decentralized, that people think about ways that you can generate more yield. But there's a thing that like regulation basically states that yield-bearing stable coins are typically treated as securities. And it's harder, like if you want to kind of like use stable coin in the form of payment and be regulated, like most of the world would basically disagree. Like regulator would disagree with that. You can actually have a payment-based stable coin that still pays interest. And that's why this makes it extremely challenging for a player like Circle. Is like we want USDC to be a payment stable coin, so we choose not to like issue yields on like USDC. And USDE, on the other hand, is doing really well. They're like the delta neutral trading strategy generates great yield in market condition like this. And there's like tokenized money market funds, right? Like another way you can make yields is like, hey, instead of holding USDC, you go like basically hold like tokenized money market funds and get the T-bill rates directly with the asset that you hold. So there's a lot of different ways. I think that they're for different purposes. I would say that like from Circle point of view, given USDC we're positioning as a payment stablecoin, we'll continue the banking way and then centralized way because it's basically the easiest way for us to continue this mission.
Which is honestly kind of necessary for the other coins to exist, because then they will always trade against USDC, and you will provide a backbone for those paying stable coins to exist somewhere. So that's a good thing. You were saying?
So I think that this is the new trend for the next year, and is this yield-bearing stablecoins. So now there are different ways to build stablecoins, and that can offer yield. So from the 200 billion in market cap, so only like 190 billion are getting any yield or like any profit from holding the stablecoin. So I think that this is a huge market that some people, a small part or big part of the market are going to look for a yield. I mean, I'm holding my asset on a stablecoin, so I'm going to look for a stablecoin that gives a yield. I think that this is the trend for the next year.
This is a pretty interesting thing. What we've seen was that one of the reasons why the yield-bearing stablecoin were so slow to grow was, and we asked a lot of people in all those RWA roundtables, stablecoin summits and all that, was that essentially if you're only paying 5% a year, a lot of people prefer to have the convenience of a USDC over the 5% a year, because when they want returns, they go on those 1,000% a year farms that are go degenerate, or they go on Bitcoin or anything volatile. And I mean, the market needed to be created for people who are okay with lower return but some form of stability. And this is where like a Circle still like Circle is seen as the floor, like really like a Circle and Tether, honestly. Like industry is not only seeing you guys still have competition, but you guys are seen as the floor. Whereas like going against this was a very difficult thing for a lot of people to understand. Like, why would we take the risk of going to some tokenized money market fund instead of just holding like something? Because when we want return, we go to Bitcoin. But you know, like bigger players entering the space and paying more than 5%, paying like 10, paying 15, paying 20, has started to break that. Now, well, let's see where it goes, because last time something was paying 20%, it got us to a market crash. So, and those delta neutral strategies are not as bulletproof as it looks like on the surface, and people seem to treat it as such against. So I guess before we stop, maybe like one quick message about what do you think the future holds like this year? I guess you just like let us know what you think would happen. What do you guys think will happen in 2025 in the stablecoin market?
I think it's 2025 is going to be the year of yield. There's going to be a whole plush new amount of stablecoin issuers coming on board. Much more liquidity next year around stablecoins, which we've seen when the market gets full of liquidity, it goes and chases yield. I think the important thing is RWA is really critical to this. My view is that credit risk is not priced in yet to collateral. So a lot of people are using U.S. Treasury for a reason, because you know, the credit risk there is extremely low that the U.S. Treasury is just going to go bankrupt. But I think what we're going to start seeing is what we saw in the past is we saw that very safe versus extremely risky issuers giving you 200% API. Why?
Yeah. What
we're going to start seeing is a gradual evolution of smarter credit risk being priced in on the issuer. You're not going to get 200 APY, but you might get 20. And it'll be all on chain. I think it'll be a lot more transparent. And this is going to happen because we're seeing more institutions coming in wrapping existing funds. And those funds will be very, very good quality. They may not be HQLA, but they could be tier 2, and some issuers may be willing to take down tier 2 as collateral to issue.
Yeah. It's clear that the industry is not pricing the risk yet. And it would be, I think it would be a positive evolution of the space. I actually should agree. Yeah.
Yeah, I'll choose a different theme. I think 2025 is going to be a year of utility. And I believe specifically the utility around like cross-border money movement, where I think the stablecoin can add the largest value. Like, I think we predicted like this year there will be a total of like 5 trillion transacted with stablecoins. compared to the 40 trillion like used in like cross-border like money movement with traditional finance rails. I believe that this market will continue to grow, and like stablecoin will take up increasingly a larger chunk of it. I've seen institutions getting more and more interested in this space. They're seeing the value, and they're like, as regulation clears up, there would be like lesser risk to no risk in institutions embracing this. So this is where I believe the direction is heading.
That would be great. Again, more stablecoin use, more on-chain usage, and everybody's going to be better. I guess the issue for a lot of companies to adopt stablecoin would be that a lot of banks around the world today still see any crypto movement coming towards your bank account as a red flag. So it will make it difficult for some companies to onboard. But if that evolves, I guess we will all be right. So thank you very much, guys. I guess like you can contact any of the speakers. You have their name. Please take a photo if you need to if you want to reach out to any of them after that. And thank you for your time, and have a great day.
Thank you.
Thanks, everyone.